Benchmark opens on a gung-ho note on Tuesday following positive global cues, broader markets mirroring gains. Bonanza for Bajaj Auto shareholders. The stock soars in trade as the company is set to buy back 40 lakh shares at a hefty premium. And a thumbs up coming in from OMCs after oil plunges as much as 4% as Saudi price cuts counter Middle East worries. An Adani Group to invest 42,700 crore rupees in Tamil Nadu across different sectors. Welcome, this is Samina and you're watching the F&O Show where we take you through all the action in the derivative market. It's actually a pretty good looking morning with the markets rebounding very smartly after yesterday's fall. The Nifty and Sensex both reclaimed important levels. The Nifty is at its day's high point in kissing distance of 21,700 while the Sensex also trades with sharp gains. Sectorally, all sectors look good, banks clearly leading the way up. Agam is standing by with more on that. Agam, quite a smart recovery after yesterday's fall.
Certainly, Samina, and I reckon a lot of shorts being covered. Let's start by taking a look at the Nifty futures, and that should be up on your screen. Well, there is an unwinding at the moment. There is, in fact, an increase in open interest. So I reckon a lot of the positions have been unwound in the first half an hour of trade. But for now, the Nifty, of course, back and higher by around 0.8%. As far as the Bank Nifty is concerned, that would perhaps see a little bit of unwinding coming through. So a clear case of short covering considering the staggering 25% increase that we saw yesterday in terms of its open interest today. That has declined by around 4.5% even as the index advances by 0.8%. Let's talk about the options market space. In terms of distribution, max OI on the call side once again shifts to 21,800 from 21,700. And on the lower end, we continue to see a little more writing as far as the 21,500 put is concerned. And that's evident, as you can see here. We are still seeing a little more writing as far as the 21,300, 21,400 puts go. Let's move on and talk about stocks then. And we can, in fact, see a bout of further shorts building into Polycab and PFC. On the other hand, Bajaj Auto, JK Cement and Adani Ports continue to see fresh longs building in. And in terms of stocks which are seeing unwinding in open interest, let's pull that up as well. Short covering across in L&T, Titan, Birlasoft, Hindustan Copper and Bandhan Bank. So I reckon that a lot of bulls will be heaving a sigh of relief considering we've seen a little bit of recovery at the moment, Samina.
You're right. I think the bulls are heaving a sigh of relief. It's actually a good-looking market. Broad-based gains across the business. IT as well seeing some buying ahead of the numbers that will be reported, probably taking a strong handover from Nasdaq, which posted one of its best days in 2 months. Jay Patel, research head, investments for Securities, and Bhavin Mehta, VP Derivatives Strategies at Dolat Capital joins in. Thank you, gentlemen. Great having you both on the show. Jay, I'll start with you first. The VIX has declined. The markets have pulled back very smartly after yesterday's fall. We did respect 21,500 yesterday, but now in kissing distance of 21,700. At these levels, one, would you initiate a long? And second, if you were brave enough to initiate a long at closing yesterday, would you hold that or would you take your profits?
So good morning, Samina. Good morning, Agam, and good morning, everyone on the panel. So definitely, yesterday's move was little surprising because we are trading in a range-bound trade, particularly 21,750 on the upside and 21,450 on the downside. Seems to be a range. So definitely, yesterday we saw buy on dips market kicking in, and the strategy successfully played successfully well. And even if someone has bought after 3 p.m. in yesterday's trade, it would be a good time to book your profits at 21,700 because we are in the higher range and particularly January is a turbulent month historically. So I would be cautious at current levels. And if we compare risk-reward ratio, there is very pretty less space for upside potential from this level. So I would be cautious and I would book profit at current levels. We can see a long build-up coming in Nifty and we can see short covering particularly on Bank Nifty. IT stocks have been supporting well in today's trade and with the likes of Adani Enterprise and Adani Ports, and even the support from auto sector. We are seeing a long build up in Nifty, but I would be cautious at 700 or 750 zones.
All right, Bhavin, good morning. Nice to catch up after really long. Your view on the benchmarks at the moment?
Good morning. So yes, we have seen a very strong pullback after the strong sell-off that we have observed in the previous trading session. Two factors that we will be closely watching out. One is the level, which is 21,400 on downside, which is 20-day EMA. Your initial risk will start once we break that particular level. While on the upside, the highs that was registered on the 1st of this month, 1st January, which was closer to 21,834 level, that needs to be broken on upside for markets to get a fresh trending move on the upside. So unless these levels are not broken, I believe that more or less we are in a range trade. And probably a profit booking once again post this kind of a strong move that we have observed initially in the range of 21,700 to 750 is very much likely.
Right. Jay, I'll talk to you about Bank Nifty in a minute, but let's quickly get on to IT with earnings expected on Thursday. What is the trade on the index, which is the IT index, and also any stock-specific trades across IT where you'd look to initiate trades ahead of numbers just to play earnings?
So if you look at Nifty IT, since past few days, Nifty IT index was consolidating in a tight range, but today we saw breakout above 9-day exponential moving average. And we can see the resistance coming in at around 35,780 zones. So I believe there would be some bit of reality before numbers kicks in. So I would be bullish on Birla Soft on IT space, particularly for midcap IT. If we look at Birla Soft, just a second. So if you look at BSOFT's chart, we can see a strong support getting in at 21-day EMA. The super trend line has been crossed above, and we can see RSI getting into positive divergence. So BSOFT would be something I would be bullish on. We can see all-time high levels coming in this stock in pretty much shorter time. So I would suggest you for buying this stock as a Jan future at around 730 zones, which is trading at near 730 zones. And the upside would be 755 zones. At the stop loss, we can keep it around 714. So the risk reward is pretty much into favor for long position. And I will suggest IT sector will be a mild performer in Q3 results.
Right. Bhavin, I want to very quickly take your view on the Fin Nifty on an intraday basis. I'm looking at the movements, and while we started off with a lot of weakness, or rather not weakness per se, but we did see the Fin Nifty go off, and fall from where it opened, and from there on we saw recovery, and now it is trading above today's open. The question really is, where do you expect the expiry to come through today, and what sort of an option strategy would you perhaps deploy considering it is the Fin Nifty expiry?
Yeah, so for Fin Nifty, over last couple of trading sessions, what we are observing is that upside is clearly getting seeing the resistance in the range of 21,570 to 21,600 range on upside. If you look at the option positioning, clearly it is indicative of further uptick in trade today. I am sensing a bull call spread will be something that participants can look at, where your risk will be limited, your reward also again limited. However, given that it is trading in a very tight range, I'm not anticipating an immediate breakout basis how the benchmark index Nifty is at this point of time. So my sense is one can look for a bull call spread between 21,400 to 21,600. I am not anticipating either a breakout above 21,600 on upside. So that risk will be limited. Not anticipating a major move above 21,600 as well.
Jay, what about you? How would you play the Bank Nifty? Is there anything that you would want to do on Bank Nifty, because it pretty much led the fall in yesterday's trade?
So I would avoid Bank Nifty for now, because the Nifty, Bank Nifty, Fin Nifty, okay. So just a second. So if we talk about Fin Nifty, I would currently avoid this index particularly because it is trading in in the shadow of the bearish candle which we saw in yesterday's trade. So I would wait for the breakout to kick in for Fin Nifty, and 21,500 zone would be something I would suggest. After crossing that level, we would be a buyer. We would initiate a long position at that level for the targets of 21,600.
Okay.
Bhavin and Jess, stay with us. We'll take a quick break. We'll come back, continue our conversation, and of course, to take you through various stock trades as well today.
Welcome back. This is the F&O Show, and we now talk about stock ideas in terms of what we can, in fact, perhaps go ahead and implement. Bhavin, I'll come to you. What are your trading ideas that you have for us today?
Yeah, so we have a two trade idea, one on the long side and another one is on the short side. The first idea is on Indigo. Stock is currently quoting in the range of 3,020 to 3,030 on the spot prices. I am anticipating this stock to move higher strongly towards target of 3,200. Stock has a very strong support zone. So if you look at this entire rally that started from roughly around 2,500 kind of a range, this stock has not broken below 20-day exponential moving average at any point of time. So given this setup, I would recommend a stop loss of 29.25, which is your 20-day EMA, and ride this move towards level of 3,200 on upside. Second stock that I am recommending is on the short side, recommending short on HUBR, which is currently quoting in the range of 2580 to 2590. A strict stop loss of 2625 should be placed for a possible target of 2480. The stock has already broken 20-day EMA with good amount of short development in trade yesterday. So a negative kind of a trade on HUBR.
All right. Jay, what about you? Your trading ideas for today?
So I have two buy calls, particularly on Adani Enterprise first. So Adani Enterprise currently sustaining January futures, particularly sustaining above 3,000 levels. That's a very positive zone, and we saw good volume buying in today's trade. So I would be a buyer at current levels 3060 January future. And the target would be 3210, and we can keep a stop loss at around 2980 levels. If we look at the daily chart, currently the stock is trading well above its 9-day and 21-day exponential moving average, and it is trading above and sustaining well above 3000 zone. So I would be a positive currently with mild flat to positive bias for Adani Enterprise. And the second would be, as we talked about, Bsoft. So Bsoft would be another peak I would look at for buying in IT space. 727 28 to 730 zones. Currently the stock is trading at that levels. The target would be placed at around 755 zones, and the stop loss would be placed at around 714 zones. The stock is trading well above its moving averages. RSI displaying about to display a positive divergence, and volume we can see a volume buying in coming in this stock. So before results I would expect IT to rally a bit, and we can take advantage of that rally, particularly in Bsoft.
Bhavin, do you track Tata Motors? The stock is doing quite well in today's trade. We saw those JLR numbers. Those were also pretty impressive, at least in terms of the street was expecting. Tata Motors at these levels, what's the trade?
Yeah, so last time we had recommended long on this stock on the channel, anticipating strong move to continue for this counter. Very good amount of consolidation has taken place over the last 5 to 6 trading sessions. I'm anticipating a move closer to 850 on upside. The only caveat here is that stock today should definitely look to sustain this level of 800. So if that happens, up move should be very sharp for this particular counter. Stop loss. So if we talk with respect to risk reward is also favorable. I am not anticipating a move below level of 775 in near term. So anticipating a strong trade. Also on the derivative side, we have seen a consistent long build up in this counter, along with good amount of roll aggression. So this clearly points out to further up move for this particular counter.
Okay, well, the other counter that we want to talk about, and this is of course from the oil and gas space. Let's pull up all the OMCs and see what they are doing right now, and take a look at where we have in fact seen traction. So HPCL, BPCL, and along with IOC, they've all been seeing some amount of gains of late. The question is that can we see a trade somewhere around here? Jay, I will take this one up with you. If you are tracking BPCL, HPCL or IOC, anything that stands out for you?
So I believe Hind Petro is outperforming all other OMCs, particularly if you look at pure OMC space, because we see a morning star pattern coming in Hind Petro on a daily chart, and if this level sustains above 436, I would be a buyer, and with level sustaining above this level, I guess just a second. So 450 would be something I would keep as an initial target, and if this level crosses out, I will keep a target around 462. So Hind Petro would be something I would suggest in OMC space. Also ONGC, after oil discovery, ONGCs I believe would be something we can look for little positional point of view, and I guess this stock can perform well above around 440. 240 would be a target in ONGC space.
In metals, I mean, today, of course, everything's looking good. But with the way the dollar is playing out and the outlook on the dollar, metals may not do too well in the near term if the dollar strengthens. Would you use today's opportunity to maybe considering some short calls on metals as a pack?
Yeah. So what we have seen this particular expiry is good amount of short built up on two of the names. One is Tata Steel, close to about 18% OI addition so far. Stock is almost down close to about 3%. Today's up move, I believe, as you have pointed out, can be looked as an opportunity to trim position, not anticipating a very strong move from current level for Tata Steel. This is one counter where one can probably reduce the exposure. However, on other hand, I believe while a few of the metal names, so notably be it Nalco, Hindustan Copper, Steel Authority of India, frequently keeps moving in and out of F&O band. However, we have seen a very strong development for Nalco for this particular series. Good amount of OI addition, close to about 70 odd percent. So if this moves out of F&O band, there could be an opportunity at lower levels to buy this particular count.
Okay. And from there on, I believe I did take the Fin Nifty view. Okay, we took the Fin Nifty view from both our experts at the moment. But I actually do want to address and pull up all the stocks which are seeing will increase in open interest. So let's have that plate up again and take a look at where we are in fact seeing a lot more traction in terms of increase in OI. So Bajaj Auto is right at the top. Polycab is the other interesting one, which I was trying to remember. Now, Polycab has been seeing a decline for the second straight day at the moment, and there has been a little bit of weakness which is starting to seep in. Polycab is one of the relatively stronger counters, which and has been over the past few months, but it's also been consolidating. If you take the past 3 to 4 months point of view. Jay, if you track Polycab, could you give us the levels to watch out for and how you would play this one?
So today, if you see Polycab's chart, it has bounced back from psychological level of 5,000 and currently it is trading near 5,121. So currently, if we look at 5,097 would be something we can keep as a support zone because the stock is getting a support at 100-day exponential moving average. And if this level sustains, we can believe the stock can cross above again around 5,365. So 5,100 to be we can keep as a support zone. If this level sustains, we can initiate a long position for tomorrow's trade.
Right. Bhavin, Jay, great having both of you on the show. It's a good-looking market. We are leaving it at that. It's Fin Nifty as well, so there'll be some activity that Fin Nifty will see in the second half of trade today. With that, it's a wrap, but we did catch up with Sumit of Malabar Investments. Here are his view on the markets for 2024.
What we saw in the markets in 2023 was sort of rising this wall of worries. I think when we started the year, I think 2022 wasn't a good year. And there were a lot of worries that existed in the beginning of 2023. And slowly as they receded, the market sort of continued its climb up. If you look at today, I mean, we think the market is reasonably well poised, right? So on the one hand, you have many positives, right? You have economy that's doing well, it's sort of gathering further pace. You have interest rates that have probably peaked out and they will come down. Macros are generally good, commodities are benign. So these are all sort of good factors for the market. But on the other hand, you also have this worry of, valuations being high globally, maybe some sort of correction may happen. You've had such a steep rise in interest rates, something somewhere breaks. There's slowdown or recession that, people have been talking about. So these are the things that are the cause for worry. But the biggest one is that the markets are always forward-looking. Right? So last year, even as things weren't that great, as they started to improve, markets already moved up. So some of this positive is already priced in, right? So where does that leave us? We think that there's still probably further upside because, as you pointed out, the rally only started in the last 2 quarters of the year, right? Just to point out, right, in the 18 months that ended in March 2023, we saw a massive amounts of foreign capital outflow, right? More than what we saw during the financial crisis. And it's only since April that foreign capital has started to come back. And what has come back is only maybe, 2/3 of what had gone out, right? So there's still some of that capital has to come back and probably more, right? Because as you said, that India is becoming more prominent, people want to put more capital in. So these sort of flows have a momentum with them. They run for a period of time. And so that will likely continue for some more period, unless something big breaks somewhere. I think so. That's what you're seeing. But at the same time, I think the easy money of rising tide, raising all the boats, I think that's probably over. So now it will be sort of more selective. Wherever you see good performance, companies delivering earnings and cash flows, that's where you may see the upside, right? So that's our view on the market.